In this video, you will learn about the taxability of income. What income is taxable? Income tax is payable on income that is accrued in or derived from Singapore. The income that SE Pastries Private Limited and BB Bakery Private Limited earn from daily operations like the selling of cakes, pastries, and bread in Singapore is Singapore-sourced income and is therefore taxable. BB Bakery also has a few customers in Malaysia who buy its cakes regularly. The cakes are baked in Singapore and then delivered to Malaysia. This is still a Singapore-sourced income as it is derived in respect of trade or business carried out in Singapore. Income derived from sources outside Singapore is known as foreign-sourced income. Such income is also taxable when received in Singapore. BB Bakery has a fixed deposit account in Malaysia. The company has to keep track of the interest income earned as it is unremitted at this point. This interest income will only be taxable when it is remitted to Singapore. So, what income is not taxable? Only income of a revenue nature is taxable. On the other hand, capital gains are not taxable. Wow! Sales for BB Bakery are booming! BB Bakery decides to sell the current shop in order to move to a bigger one. As this sale is not part and parcel of BB Bakery's day-to-day operations, Bobby, director of BB Bakery Private Limited, wonders if the gains from the sale of this shop are taxable. Bobby decides to check out the IRAS website. The badges of trade are commonly used as a guiding principle to determine whether a one-off or unique transaction constitutes part of a company's trade. If the company had bought and sold the property with a profit-seeking motive or as part of its trade, the gain will be considered revenue in nature and is taxable. Otherwise, the gain is capital in nature and not taxable. Here are some factors to consider: the nature of the sales transaction, the length of ownership of the sale item, the frequency of selling such items, whether supplementary work has been performed on the items, circumstances under which the sales was made, motive for buying and selling the item, and mode of financing the item when it was purchased. The subject matter in question is BB Bakery's shop. BB Bakery is not in the business of buying and selling properties. The company had acquired this shop to run its bakery business. So, this shop is considered a permanent structure of its business. BB Bakery has owned this shop for many years and has used it to run the bakery since day one. This is its first time selling a property. BB Bakery has no plans to renovate the shop to sell it for a higher price. As part of BB Bakery's expansion plans, it has to sell its current shop to move to a bigger one. BB Bakery had acquired this shop to run the bakery business. It had previously obtained a long-term mortgage loan to finance the purchase of this shop. Other factors may also play a part in determining whether the transaction is revenue or capital in nature. After considering all the above factors, Bobby concludes that the profit from the sale of the shop is capital in nature. Therefore, it is not taxable. Great news, BB Bakery! Bobby finds that the badges of trade is useful in determining the taxability of non-recurrent transactions. However, he has to take note that he must always consider all the factors in totality. No single factor is conclusive. These are the basics of the taxability of income. Let's recap. Income accruing in or derived from Singapore is taxable. This is also known as Singapore-sourced income. Income derived from sources outside Singapore is known as foreign-sourced income. Such income is taxable when received in Singapore. Only income of a revenue nature is taxable. Capital gains are not taxable. You may visit the IRAS website or contact us for more information.